Hello everyone, hope you're doing well. Welcome to another Monday Markets episode brought to you by the FTX app. Links available in the description below. Let's go over the higher timeframes, the monthly, the weekly, and the daily for BTC USD. I think most of the useful signal is currently on the weekly and the daily timeframes, but we'll just get some high timeframe perspective and then take a peek at ETH as well. If you enjoy these shorter videos, do leave a like and a comment. I know it sounds repetitive, but it does make a big difference, and we always love to hear from you. So first things first, on the monthly timeframe, I think the reason this high timeframe downtrend is kind of slowing and churning a little bit is because we had a very big, very fast, very aggressive move into the first significant cyclical level, which is at 20k, and that's where a lot of the churn and congestion has been taking place. The next level, should this floor fail, is deeper into previous cycles level, as I mentioned, at around 14k, and there's also candle structure all the way to like 10k. But honestly, at that point, it's a distinction without a difference. It's like 14, 12, 10, whatever it may be. On a percentage term, it will make a difference and you'll feel it, but structurally, that is the next area of support, and trying to pinpoint it exactly isn't terribly useful. It's more just defining high time frame areas. We're at one now at the extreme of previous cycles levels at around 20k and 1400 for ETH, and should that fail, there is some way to go until we reach deeper market cycle levels. So that's kind of where the market is from a higher time frame perspective. As far as the weekly time frame goes, I think this is the first area which has sort of levels that are meaningful to us. As mentioned, I mean, 20k can be defined on the monthly or on the weekly time frame. It's the same type of area. The basic premise is its previous cycle all-time high, and the consolidation in that type of area, and also some more recent candle structure, albeit somewhat faint, before the real extreme uptrend started. And that's sort of where buyers have shown a willingness to step in and, you know, buy and absorb a lot of this forced selling. Now, on the weekly time frame, it would be remiss of me not to mention the 200-week moving average. I mentioned it on the way up, on the way down, and it's just as relevant as ever. So again, just kind of quick recap. Historically, a lot of the aggressive bear market selling has slowed down at this 200-week moving average. You can see the 6k to 3k breakdown. That moving average was where the apex of the selling took place, and price kind of churned and consolidated there before meaningfully reversing trend. The same happened in the COVID crash, where completely crazy wipeout outsized move here really overshot this level, as you typically get with crypto and high time frame levels. It went a lot above it if it's resistance, in this case a lot below it because it was support, but ultimately, at least on a weekly closing basis, if you filter out the wicks, the apex of the selling took place around the 200-week moving average, and then ultimately when it started closing above it on a closing weekly closing basis, that's where you saw a trend reversal and a resumption, or the creation of a new uptrend. If we look at how the 200-week moving average is acting now, it's slightly different in character, and that's characterized by two things. The first is that we're getting consecutive closes below the 200-week moving average. So in the past, it was kind of an area of support, and the market for the most part stayed above it. At the moment, it's an area of resistance, and the market for the most part is staying below it. So that's not great. The second point is it didn't act as support, and it's currently acting as resistance, right? So you had the weekly close below it on the big outsized week you see here, and since then, not only are you having consecutive weekly closes below it, but when the market has pushed up and tried to break out, that's been the ceiling for price for the time being. So at its face, we have to take the market for what it's telling us, is that the market is at resistance, and this 200-week moving average is an area of resistance until proven otherwise. Accordingly, I think if you want to take quote-unquote confirmation longs, or longs which have more evidence for them at the cost of a worse entry price, I think flipping this 200-week moving average to resistance, which it is right now, to support would be a pretty good signal for a reversion, or at least a counter trend move. Now, as discussed, where that reversion would take us, if we kind of look at candle structure and high time frame levels, the bearish retest, like this trend has been so strong that a bearish retest would take us all the way to 30k or thereabouts, 29 to 32k, and any more meaningful reversion can take us deeper into 30k in this cluster from 34, 36, whatever it may be. I think more broadly, we could just say 30k plus, and on its face, the long trade entry would be the following, which is turn the 200-week moving average from resistance to support, i.e. close above it, and in that case, target a reversion higher towards 30k plus. I think on its face, that's the first reasonable high time frame long scenario that will be available. Again, if you're not comfortable just blindly buying previous cycles levels, I think both of those trades are fine. It's just this trend has been so aggressive and one-sided that I personally haven't felt compelled to step in blindly at support levels, and I do want to see some evidence of absorption or a failed breakdown, especially so far in the trend. Ever since, mid 40s, 50k, whatever it may be, every single breakdown of support has had follow through. So I'm definitely waiting for a shift in that structure, a shift in that behavior to suggest that at least a mean reversion may be available, if not trend reversal entirely. So market still below support / at resistance. It's a big level, one that's been psychologically and cyclically important in the past in the form of this 200-week moving average. Flip it, I think we're in business, and there's plenty of reversion or space to catch a move towards those targets. I mean, conservatively, we're talking 30-40% on BTC USD should that setup come to fruition, and that's probably even higher for altcoins as well. I'm just being conservative about it because, first of all, that's generally how I trade, but also just simply I'm showing respect and deference to how strong these high time frame breakdowns have been. I want to see that behavior change before I speculate on the long side of things. And I still just don't think there's a rush for any of this kind of stuff in general. Even if you catch a mean reversion, if you're looking for the bottom or a new uptrend, that's a product of more time as much as it is more price, right? So the price definitely sets some sort of bottom, but time is the factor which is also kind of needs to converge with price, that enough time has passed that people aren't cynical. A lot of the bodies have been washed up and washed out, coins changing hands, cynicism goes away and optimism comes back, we get new catalysts, whatever else, and that's just a time-based process that we can't really rush or accelerate, in my view. That doesn't rule out a larger mean reversion, as mentioned, but just from a macro point of view, that's something to consider. And the only other factor is that there are kind of macro headwinds, or at least volatility risks, coming up in the near future. I think there's some more CPI readings as far as US economic data on inflation goes. There are earnings coming up, so stuff that's sensitive to the S&P 500 is coming up in the next week or two. And as we've learned, for some the hard way, stuff that affects the indices also affects crypto. Now, there will be some signal once that stops being the case, like if crypto starts meaningfully decoupling or showing strength in the face of S&P weakness or whatever it may be. But until that evidence emerges, it's kind of worth assuming that stuff that's risky or bad for the S&P will similarly have an adverse impact on crypto, again, until proven otherwise. If we look at the lower timeframes, we can sort of revisit some of the themes we said and discussed last week. You can see clear evidence here of the same 200-week moving average acting as resistance, which isn't great. And at the moment, just taking this whole range consolidation to mind, what we've had so far is a spike through the highs into the 200-week moving average and then a move lower. So that's not fantastic. I think that's ultimately what's capping the breakout, is at least technically the 200-week moving average, and then structurally just a reduced willingness to take risk in the face of upcoming S&P price sensitive headlines and just kind of more macro world stuff spilling over. So in terms of where the market is right now, I think I'm going to take a note from Don's book. So ultimately, just to be clear, the highest conviction stuff is flipping this range high and 200-week moving average type of structure from resistance into support. I really think that would be the first meaningful shift in market structure and evidence for a larger reversion higher. At the moment, that's still resistance. As far as where the market is right now, I do have kind of a lower likelihood or lower conviction level in mind, and it's this market structure higher low type of level, this cluster anywhere between basically 19k and mid 20k. I think this is a meaningful market structure level for the following reasons. If we kind of reassert what bullish market structure means, it's higher highs and higher lows, right? So if you're going to characterize bullish market structure or some sort of uptrend, broadly speaking, although it never looks like that, this is what it would look like, where the highs are consecutively higher and the lows are consecutively higher as well. So if this is the type of pattern that we're facing within this daily range, and that's what you want to see evidence of if you're looking for bullish price action and bullish market structure in general, the market here, as it's pulling back from the range high, has to make a higher low. And I think the reasonable area or the necessary candidate for that type of higher low is within this cluster, this consolidation. And I guess I could title it a bit more surgically, which is between 20.7k and the lower boundary at 19.7k. This really needs to hold for the bullish market structure argument to have any effect, because if this breaks and the market, will make a lower low in doing so, or at least an equal low, then the bullish market structure argument becomes far less compelling. It kind of looks much more like a failed breakdown, and the next target would be a move towards the range low or thereabouts. At this point, the whole range low wick structure looks pretty vulnerable, and so if there's going to be bullish price action, it sort of has to come from where the market is right now. And what you want to see, considering the 200-week moving average as resistance is essentially bullish market structure built in the face of increasingly weak reactions to resistance. So visually, what that would look like is you've got a level of resistance, right? Let's say this is the 200-week moving average, or it's a range high, or whatever confluence structure you want. What you generally want to see is that the market comes into it and initially makes like, a very big move off of that level. And then when it retests, it still reacts, but makes a slightly higher low relative to the last test, right, from here to here. And that would start to signal that the sellers of at resistance, those reactions are getting weaker, and the market is more willing to absorb those sells and just generally looking stronger, right? The level of resistance having less impact on consecutive tests than it has in the past is generally a good sign. And then ultimately, if you get bullish market structure at resistance, the way these types of structures tend to resolve is as it keeps testing the level, it keeps making higher lows, right? So this is the first reaction, very bearish, next one higher low, next one higher low, until ultimately the market pushes up into that resistance, and instead of getting some sort of weak reaction, it simply coils at the level, and then you get your breakout and acceleration. So this kind of structure or diagram is worth bearing in mind, because I think it's the only way this high time frame range resolves bullishly. So you essentially have bullish market structure building and brewing under resistance. In this case, the resistance being the 200-week moving average and this range high structure, whatever it may be. I think you can pretty much box out this candle and have a pretty good idea of what's going on. So if this is going to resolve in a positive manner, what you want to see is that, reaction to resistance, higher low, push up from the higher low area, reaction to resistance maybe, and then an even shallower pullback until ultimately the market spends enough time here and starts dipping far less aggressively and spending more time at resistance, and then you get your breakout and acceleration towards those higher time frame targets. But the only way that that thesis can become valid or tenable is if you get bullish market structure below resistance, and for that to be the case, or for that to continue to be the case, this price action we're seeing right now has to resolve in a higher low, which would mean holding this cluster at 19.6 to 20.6. I think anything much, at least on a closing basis, anything below this cluster starts to look really bad, and that kind of higher low into resistance thesis also starts to go away. So I think you're dealing with a pretty clear area to generate signals, or at least give you an invalidation. So just to recap that, I still think the best higher time frame signal is going to be a weekly close and reclaim of the 200-week moving average. That would be very good. We're still below it. It's still resistance. So this is still very conservative and cautious. You have to take the market at face value sometimes, and it just looks like that level is resistance. Fine. What would change that relationship? Well, what would change that relationship is a bullish market structure at that level, and that would require higher lows. Those higher lows would have to come from 19.6 to 20.6 to be the case, and then you can either wait for that to unravel and do business, at the breakout point at this 200-week moving average, or you can bet on the higher low itself and hope that it ultimately resolves in your favor. I think both of those are fine. I'm still very much high time frame oriented, so I'm more than happy waiting for the weekly signal, as mentioned. But in terms of where the market is right now, and if you're looking at slightly lower time frames, you want to see that pattern that we talked about in that design start to emerge, and the only way it's tenable is if this area provides a higher low for BTC USD. So that's kind of what's on my radar there. Nothing too different for ETH. The price action's like a bit choppier, but you can still see the significance of the range high in tandem with the 200-week moving average. We can take some liberties and just draw out the range high here. I think the higher timeframes look pretty much the same for ETH as well. So we can essentially mark out this range high structure consolidation, whatever it may be. And I think very much the same view is applicable to ETH USD structurally as BTC USD, which is to say that you're getting consecutive tests of this range high 200-week moving average area resistance. It's still resistance, that's worth being cautious of at face value. But if it's going to resolve bullishly, you want the market to set some sort of higher low and keep pressing up into this resistance until eventually the sellers run out of tokens and the market pushes higher. So pretty much the same considerations apply to ETH at USD. The market is still below / at resistance. We want to see either A, a break of resistance, and then you essentially chase the momentum that you hope follows through, or B, and this is more speculative, weakness at resistance in the form of higher lows and weaker reactions each time, and that can also allow for positioning. Those are the two scenarios that I have on my radar and would recommend for you to consider as well, and I think those are the ones that are likely going to come into play over the course of this week. Nothing too special in altcoin land, in my opinion. I think maybe we can talk more about altcoins if we get higher time frame resolution for BTC and ETH, and we can talk about which ones can play catch up in a greater way or offer greater returns. Narratively and structurally, there's not a lot going on here that I find interesting. The majors, surprise, surprise, still have my focus. As for the indices and higher time frame S&P 500 stuff, more consolidation. I mean, monthly levels of support are holding, which is fine. I mean, it's kind of at the range high for the Nasdaq. The S&P is sort of in a higher time frame area of support, but also slightly lower time frame resistance and sort of congesting below this retest level. And I think a lot of the market is waiting to see what the inflation print and earnings are going to be like before expressing particularly strong views. That's all I've got for this episode of Monday Markets. Let me know if you have any questions. It's pretty much BTC and ETH oriented, and the basic premise is we're either going to get a weekly breakout, which would be a bullish signal, or a lower time frame higher low, which would also be optimistic. If it's not one of those, then it's probably not worth your attention, in my opinion. That's all from me. I hope this is helpful. I do love reading your feedback, so let me know in the comments or just leave a smiley face if you enjoyed. As always, please support the show by checking out the FTX app, the best mobile trading and portfolio tracking experience on the market, via the links in the description below. Hope you've had a wonderful weekend, and I will see you for tomorrow's newsletter, trletter.com, and then lots of other content coming for you this week. Take care, trade safe, and I will speak to you later in the week. Thank you again for your time.